Dun dun dun! Welcome back, ladies and gentlemen, for another YouTube video. This is going to be our daily cryptocurrency market update, and it is a big day ahead of us, guys. Around about an hour and 10 minutes from now, this video will come out at 1 p.m. So 1:30 p.m. UK time, 8:30 Washington time. We are going to get the CPI print for the United States. This is significant. This is a large driver of markets, monetary regime, and everything associated with them at the moment. The prior one that we had was 9.1%. This one is looking to come out, certainly given the consensus, at around about 8.7%. And you can see some of the estimates here. Goldman Sachs is aiming for slightly higher at 8.8, Barclays 8.8, Citigroup 8.8, Bank of America 8.7, HSBC 8.7, and so on and so forth. JP Morgan 8.7, Morgan Stanley 8.6. I happen to think that potentially we're looking at like 8.5, maybe. I wouldn't be surprised if we got that kind of print. That should be good news for markets because it shows that inflation is coming down, not coming to an end. I think inflation is going to be a persistent problem. I think we live in a very different world now from March 2020 onwards. But essentially, this is going to be the driving factor for markets. And we saw markets sell off yesterday after rejection of that 24K. I think this has a lot to do with people de-risking going into and taking, certainly if we look at open interest for Bitcoin, people have taken a lot of those or closed a lot of those contracts out, really anticipation of what this may mean. Now, it's a very hard call because I actually wouldn't mind taking a long here, to be honest, and seeing if we can get up towards here. But that is really going to be decided on what the market tells me today. So do we get that further down? So do we break these trend lines? I think potentially we're in for a bit of a ripsaw, something like this. I think something like this may occur that may then start the next down leg. It's a very, very crucial day. The inflation narrative is really the driving narrative of economics right now, certainly what the Fed are doing. We know the Fed are taking large amounts of liquidity off the table. A lower print markets may take initially as beneficial, but at the same time, in this kind of upside down environment that we're currently in, that has been really created by the central banks around the world, you really just don't, good news is coming out as bad news and bad news, good news, and so on and so forth. Like the fact that we were in a recession, we had two negative terms of, 2 negative quarters of growth, which is the traditional term for a recession. But markets actually rallied off the back end of that because they're looking forward and going, okay, well, this means that the pivot is going to come sooner from the Federal Reserve. So it's going to be very, very key. Again, this comes out at 1:30 p.m. UK time, 8:30 a.m. for Washington. We will see. Of course, I'm going to be watching this and checking on it with my Patreon members. Some other big news today is Elon Musk sells 7.92 million Tesla shares worth 6.88 billion. Earlier this year, Tesla and SpaceX CEO said on social media that he had no further Tesla sales planned after the 28th of April. After Musk's latest stock sales were revealed, Tesla fans and promoters asked the celebrity CEO if he was done selling shares in the electric vehicle business and if he might buy back shares in the future. Asked if he was done with selling, blah, blah, blah. So he's essentially reneged. He told people he was done on selling them, and now he has indeed dumped on the market. We also saw Larry Fink, the largest asset manager in the world, actually look to sell, I think it was 8% of his BlackRock shares. Why are all these big guys, these big sort of financial giants, doing this? Is it because they think that markets are going to go up? Remember, in the case of Larry Fink, that the last time he sold that sort of a volume of stock was right before the March 2020 crash. Now, that isn't me saying that we're going to have another March 2020 crash. I have said for a while now, I kind of feel like we're waiting for a Lehman's moment. But we will see. It's too, you can't really call that's somewhat of an unforeseen thing, but there are definitely the precursors there that make me extremely worried. One of the main ones is the yield curve right now. This is kind of accurately depicted. Let's sort this out. Let's get it off a daily. Let's put it on a weekly. This is accurately depicted pretty much every single financial crisis that we've had. And look at where it currently is, guys. It's at sort of pre-dot-com boom levels. And this is kind of what I think is coming. We've looked at the equity sector in great detail. We've said, look, this is a very, very dangerous structure that we're currently in. You can see that this is really make or break here for the equity market and the crypto market, which is largely tethered to the equity market. Because if you roll here, not only are you coming up and bumping your head on this 30 weekly moving average, this is what you want to see in a downtrending market, a downtrending moving average. Vice versa, you've got the uptrending. We're also at this head and shoulders neckline break. So it's very common on a retest that you come retest and then you get that further capitulation. That's potentially what we're looking at here, in my opinion, guys. I think crypto's largely going to go with it, and we'll see how markets react to this CPI print. They potentially could do quite well, but there's the adverse effect of that good news is bad news in this kind of an environment, because it will kind of give the Fed the right to go, okay, well, what we're doing is working, so let's keep doing it. That's the kind of short and curlies of it. And this was a little bit more. Musk sells 6.9 billion of Tesla to avoid Twitter fire sale. So usually the interesting thing here is there's always a reason why individuals have done certain things. So, you know, Musk will say that he's done this because of this, even though the actual reason may not be. You got to be very careful what gets spread around on kind of Twitter and the broader sort of speculative landscape. Next interesting article, and then we're going to get into a few really interesting things, like the fact that Iran links first import order paid with crypto. This is bad news because Iran are under heavy sanctions. They're potentially avoiding them via the cryptocurrency market. How is America going to react to this? It's going to be very, very interesting. We also had a little bit of tornado cash news. People were essentially sending 0.1 ETH to a lot of influencers' address, knowing that the sanctions that have sort of been levied against them. Let's start with this one, guys. A tragedy. Britain's cost of living crisis worsens as rent soars and energy bills top £5,000 or dollars in this case. Don't know why they're relating that to Britain. They should have used pounds. But anyway, this is why do we keep talking about this? Well, this is what I kind of factor in when I think about markets. You know, where's the rally? Where's the momentum behind a move going to come from? I don't think it's going to be consumer. Is it going to be institutional? Well, I don't think so, because they're getting pretty badly squeezed at the moment. And in actual fact, many of them are deleveraging and kind of getting rid of stock that they have sort of set aside. So, you know, where exactly is it going to come from? This is the big ask that I'm asking myself, and I don't actually think, you know, it's going to come from the consumer, the everyday person. Whereas March 2020 onwards was, and certainly had a big sort of consumer involvement in it, but the conditions were just simply different then. We didn't have all these high, you know, skyrocketing prices, so on and so forth. We're now in a very different environment. So that's the big thing that I always ask myself relating, you know, markets have moved on. Liquidity, capital scarce, and liquidity scarce in the form of the dollar, not just the dollar. Now the pound is on a similar regime. The euro is on a similar regime. What does that mean for markets? You know, they're not going to have as much of that liquidity flowing into them because it's going to be a lot less scarce. On to the Iran news. Iran links or inks first crypto. So this is bad. So Iran will commonly use crypto to settle import orders by the end of next month, tweeted the head of Iran's trade promotion organization. So this is not good news at all for crypto, certainly in regards to the US. The US have got some hard-hitting sanctions on Iran that they're essentially bypassing via the cryptocurrency market. You know, how is the US going to react to this? Probably not very well. And it won't just be Iran that will be doing this. You know, this is a real threat, I think, to the crypto industry in regards to the fact that, you know, you can't control Bitcoin. You can't control who uses it and who chooses to send what with who. But they can certainly sanction it and you know, come down or create some sort of real harsh regulation in regards to it that may have quite a negative impact. Next bit of news before we wrap the video up, guys, is to do with Tornado Cash sanctions, exposed potential DeFi. So essentially the US blacklist dozens of Ethereum addresses when it's sanctioned Tornado Cash. Can a major DeFi protocol like MakerDAO get caught? So this is interesting because the US have sanctioned this, talking about the Iran thing. They're essentially going after wallets that have had a link with Tornado Cash. Now, just some very kind of sort of funny but could be quite serious news. This is from Dylan and Kirk. Sorry, guys. This is about to get very interesting. Someone is sending 0.1 ETH straight from Tornado Cash to public wallets of influencers and known celebrities. So kind of funny, but at the same time, you know, are there going to be penalties as a result of that? The bigger question is, are you going to have the likes of DeFi protocols that may have, you know, some Ethereum on there that's interacted with Tornado Cash actually look to be sanctioned and have harsh, you know, regulations imposed upon them that would damage and kind of hinder the usage of them. You know, this is all stuff you've got to look at in this sort of new speculative early market. So again, big day, CPI data reveal. We'll look to take positions. I think we are almost position free. We've got a couple of sort of testers in the water in regards to shorts. But to be honest, guys, we could just as easily end up taking longs. It's not that clear cut at the moment, I don't think. And really, I think the safest bet is to wait for this, see how markets react, let the dust settle, and then look to allocate or put trades on. All I've got for you in this video, guys, just again to reiterate my bias, I think we see lower prices across the board for the cryptocurrency market. That doesn't mean that this rally can't continue for a little bit longer. Still well within the sort of parameters of a relief rally. I'm going to love and leave you on that one, guys. Catch you all in the next YouTube video. Thanks a lot for watching, and have an amazing Wednesday.